Obviously very happy to be here, Canada at a USA conference. It's an interesting time to be the Canadian in the room. And as everybody to date has gotten away from politics, I'll stay away from politics as well. Just happy to be in a place where I feel welcome and aligned.
That's because you're in Germany.
Exactly. All right. Before I talk about the alternative side of things in Canada, I think realistically I have to give a little bit of an update on, let's talk about the broader Canadian market, just to sort of set the stage, because the message I'll be delivering to you is the alternative space in Canada is dramatically different than the traditional spaces, and traditional, obviously, office, retail, industrial, apartment. If you look at the Canadian market, look, it's a big market. It's similar in scale to France, Germany, all those types of things. If you think about the market itself, though, what separates Canada from a lot of markets around the world is the domestic nature of the traditional buying habits. We all know about the Canadian pensions and the early move into the real asset side of things, but it's really been a consistent bid in the market, and it's not just the pensions, it's the private REITs, it's the public REITs, it's the family offices. So there's always a bid in Canada for quality assets. And what that's done over the many years, if you can get into the Canadian market, is a consistency in performance. If you look in the last year, 3 years, 5 years, not the last 10, but those time periods, it's outperformed the US market as far as relative to Odyssey. It's had lower volatility, and it has a surprisingly low correlation to the US market, which is supposed to be, we're attached to the hip to, and everybody's expectation is there's heavy correlation. There's not. Maybe it's because of that consistent bid. When you take a look at the liquidity in the Canadian market on a relative scale, it's been fine because of that consistent bid in the market. There is great aspects about the Canadian market, be it the consistency, the rule of law, strong domestic credit market. We like to say the top 5 banks in North America are all Canadian as it relates to credit quality. There is no middle market concerns as it relates to, the middle market banking system in Canada. We just have a strong central banking system that provides support and liquidity across the board. As far as liquidity, it's a great market. Current cap rates. What's interesting about the Canadian market, and I've been learning a lot here, learning about the US market. I agree. Look, NOI growth is a requirement here to provide support and value upside over the near term. We obviously would say the same in Canada. What I would highlight, though, in Canada is because our Bank of Canada has been the most aggressive in lowering rates and continuing to lower rates, our overnight rate is now at 3%, down from 5%, expected to be at 2% by year end, excluding tariffs. If tariffs hit, it'll probably be closer to 1% as time plays out.